What do taxes look like in retirement? Hi, it's financial planner Sean Mullaney. Let's discuss. So over the next few weeks on the channel, we are going to do an inquiry, a deep dive on what do taxes look like in retirement. And this is sort of the missing piece of the puzzle. People worry about traditional versus Roth. Should I be doing Roth conversions? And we've got all sorts of content out there. But I think the missing piece is, what do taxes actually look like in retirement? Once we understand what they look like at varying levels of wealth, then we can start to unpack traditional versus Roth. Should we be doing Roth conversions and the like? All right, so we're going to start at the bottom end of the affluence scale, a $500,000 traditional IRA in the feared widow's tax trap. But we're going to go north in the next few weeks, so hit that subscribe button so you can see how a $1 million traditional IRA is taxed, how a $2 million traditional IRA is taxed, and how a $5 million traditional IRA is taxed in retirement. I think you'll be interested in those results. All right, but let's start with Dorothy. She's got a $500,000 traditional IRA. She's 80 years old. She's a widow, and she's got a $25,000 savings account, Social Security, and a paid-off home. She's not doing great, but she's certainly not poor. And she's actually doing a lot better than most Americans. If she gets $40,000 in Social Security, she's ahead of the curve. I'll link to all these resources below. Average, according to this, according to Social Security, the average benefit's about $2,100 a month, $25,000 a year. We've got Dorothy at $40,000 a year, so she's above. And then what about median wealth? Well, the Fed has a chart here. When we have median wealth, according to them in the year 2022, so a few years back, but how much could it have changed? Surely it's changed, but how much? Median financial wealth for those 75 or older is about $50,000 in the year 2022. Well, okay, we've got Dorothy at 10 times that wealth. So she is definitely doing well. She's actually below average in terms of, you got to remember, billionaires hit that average. So the average isn't as important as the median. I'll link to this. Her income is about $65,000. Well, median income for her cohort, 75 and older, is only $47,000, $48,000. So Dorothy is not crushing it by any means, but she's also not impoverished. She's actually above the median retiree of her age group. So there are going to be some who say, oh, $500,000 in a traditional IRA, that thing's infested with taxes. Isn't that a problem? Well, let's start constructing her tax return to figure this out. All right, so we look at her Social Security. Remember, she got $40,000 of her Social Security. Only about $14,000, $15,000 of that is taxable by my estimate, right? So I put together a little worksheet on that. You've got to do you. Covisium.com has a great calculator on this. I'm getting her with, if you can review my calculation, I've got all these letters, but I'm getting her with about $14,500 of that is taxable. Okay, great. Our interest income taxable. Ta-da, right? RMD is $24,752. That's based off the IRS Uniform Lifetime Table. There's a factor. She's 80 years old. She divides the prior year balance, $500,000, by the factor, 20.2, almost 5%. All right, so almost 5% of the account comes out as an RMD. So her adjusted gross income is about $40,000. Now she gets a nice standard deduction, and I've got the IRS link there for that, $16,100. She gets this additional standard deduction. She's over 65. She gets the new One Big Beautiful Bill senior deduction, $6,000, obviously helpful to her. So her taxable income on $65,000 of actual income is $16,000. I bet a lot of folks didn't realize that you could be a widow in the widow's tax trap, have actual income of $65,000, but you get to tell a lie on your tax return. Congress has said you get to tell the IRS a lie. You get to tell the IRS that of your $65,000 actual income, your taxable income is $16,000. Pretty cool that Congress gives retirees the ability to lie to the IRS, but I didn't make the rules, Congress did. So we look at her and we get a federal income tax of about $1,700. Now that's interesting to me. And I want to unpack that $1,600 a little bit more, $1,700. There's no IRMA. There's no net investment income tax. In future weeks, we'll deal with IRMA and some net investment income tax, but we don't have to worry about that for Dorothy. Look at Dorothy's effective tax rate on her $65,000 of income. For all the fear-mongering about taxes in retirement, few people say, well, a median retiree might pay 2 or 3% effective tax rate. But that's where Dorothy is in the widow's tax trap with a $500,000 IRA. Let's just assign all these taxes, the $1,700 to her IRA distribution. It's about 7%. So essentially, Dorothy's in this position. We'll go through the tax calc where you could view it as she gets her interest income tax-free. She gets her Social Security income tax-free and then has to pay the IRS 7% of her RMD. Most Americans would gladly sign up for that, but that's the reality if we're a little more moderately affluent. All right, so her top rate is 12% statutorily. We'll come back to that. Look at the RMD tax. I think this is fascinating. So she's got to take that $24,000, $25,000 out, and people worry about RMDs. Well, of that $24,752, almost 35% of it is subject to a 0% tax rate. Whoa! So I'm forced to take a tax-free distribution. What a terrible rule. And then look, 50% of the RMD is subject to a 10% bracket. I got 15% subject to the 12% bracket. Okay, that's not great, but that's pretty dang good. Remember, her and her husband almost certainly took a 12% or higher deduction when they contributed to a traditional 401k at work. And then you see just how small the percentage of the wealth that the IRS collects every year. The tax calc is revelatory. Look at this. So, Dorothy is subject to 6 different levels of income taxes. Amazingly enough, 4 of those 6 levels are 0. So on 4 of the 6 levels of her income, she pays a 0% tax rate. By the way, essentially what happens is the interest income, a lot of the Social Security is simply excluded. So 25 of the 40 is excluded. Great. Her interest income is covered by the standard deduction. The rest of the Social Security is covered by the standard deduction. So she doesn't pay a penny of tax on her Social Security income, but we'll come back to that. Look at this. The RMD, 8,700 of the 25,000 RMD is subject to a 0% tax rate. That's what I refer to as the hidden Roth IRA. In the widow's tax trap with an RMD at age 80, Dorothy gets an $8,600 hidden Roth IRA. I've done videos on the channel on that phenomenon before. From a planning perspective, I look at it as mostly a late 60s planning opportunity where it can be phenomenal. But look at this. Dorothy takes out $8,000 plus from a retirement account and pays 0 federal income tax on that. That's the hidden Roth IRA. Isn't it amazing that we found a hidden Roth IRA on a $500,000 IRA in our 80s in the widow's tax trap? And then you see some of the RMD is going to hit the 10% bracket, 12% bracket. Obviously, that creates tax. That creates our $1,700 worth of tax. Now, there is one thing I'm going to add to this analysis, and it's this. Some out there are going to say, wait a minute, Sean, what about the Social Security tax torpedo? And congratulations, Magellan, you found it, right? You found this tax inefficiency. So what I mean by that is, recall this calculation, taxable Social Security. What happens is this. As Dorothy's income increases, she increases the amount of that Social Security that's subject to income tax, reducing essentially the hidden Roth IRA, increasing the amount subject to the RMD subject to the 12% bracket. So yes, as an economic matter, let's call it 22.2%. If Dorothy's RMD goes up $10, she's going to increase her taxable income by my estimate something like $18.50 because she's going to have a $10 more of the RMD, $8.50 more of the Social Security being taxed, and the effective tax rate when we all toll it on those last $10 is about 22%, 22.2%. But we've now found a tree and we're ignoring the forest again. Again, let's go back to the forest. An effective rate of 2.56%. in the widow's tax trap with the Social Security tax torpedo. She's in the Social Security tax torpedo. And it's essentially a sign that overall she pays very little tax. And yes, maybe on the last couple of dollars, there's this tiny inefficiency that we found in a spreadsheet, okay? So I would say that for most Americans, because most Americans are about where Dorothy is in retirement or worse, right? So the majority of Americans, boy, taxes are light in retirement. And I'm not even here to say politically whether that should be the case or should not be the case. It is the case. What do? We're going to double Dorothy's taxes, and now her effective rate's going to go up to 5%. Boy, that's still a pretty good outcome for Dorothy. I think this examination of where so many Americans in the widow's tax trap find themselves is revelatory, and it shows us that perhaps we should not fear taxes in retirement. That said, let me know what you think in the comments below, and stay tuned because next week we're going to look at $1 million traditional IRA and how is it taxed in retirement. Thanks so much for watching. If you like this video, please mash that like button and subscribe to my channel. I will see you next time.